Hello, and welcome to Virtual Investor Conferences. My name is Cecilia, and on behalf of OTC Markets, we're very pleased you've joined us for our next live presentation from NG Energy International. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Don Sewell, President and Director of NG Energy International, which trades on the OTCQX under the symbol GASXF and on the TSXV under the symbol GASX. Welcome, Don.
Thank you. Let me go to the first slide here. Well, thank you all for joining today. NG Energy is a natural gas exploration and production company focused on solving the energy security issue impacting Colombia today. This issue will persist for the next 5 years at least, and as a result, we sit in a very high price market. Given the structural domestic supply shortage and given current spot prices are at $8 US and MMBTU. This translates into a 60 to 70% margin or a netback of around US 545 an MCF. We have three blocks, two on production today, which I'll go through in a moment. And we're looking to exit 2024 at 45 million cubic feet a day and going to 60 million cubic feet a day in the first half of 2025. We have a veteran management team and board with a breadth of operating experience in the country and in Latin America, coupled with strong capital raising and M&A track records. And lastly, Macquarie Group has been a strong supporter of our business. In March of 2024, we announced a US $100 million credit facility with $50 million committed. And they are very supportive of our business, the management team, and the macro backdrop in Colombia. So we're currently producing 20 to 25 million cubic feet a day as we ramp up to 45 million cubic feet a day by year end. Mainly the ramp ups coming from CNU9, which I'll touch on later. At 45 million cubic feet a day, we are highly profitable and we'll have run rates, cash flow of around 45 to 50 million US. Given the assets we hold, especially CNU9, which I will discuss later on, our goal is to grow the business to over 200 million cubic feet a day and 1 TCF of reserves, offering industry leading triple-digit growth in not only production, cash flow, and reserves. And we look to achieve this over the next couple of years. Given the infrastructure in place and the expansions that we've announced that we are negotiating, we have a clear line of sight to over 120 million cubic feet a day corporately, and over 120 million US of funds flow from operations in the near term, and over 200 million of FFO in the medium term. In 2024, we saw 2P reserves growth of 314%, or 162 BCF for an NPV10 of 260 million US, and 3P reserves growth of 551%, or an NPV10 of 467 million US, mainly driven by CNU9. And it's important to note that we only have 4 wells drilled to date, 2 at CNU9, 2 at Maria Conchita. And in our reserve report, only 3 of 11 prospective zones at CNU9 are included. As we execute our drilling plan in 2025 and pursue 3D seismic, we'll not only look to increase the reserve book, but we'll also look to transition our reserve book, from 3P to 2P to 1P reserves. Lastly, given it's still early days at CNU9, if you include our contingent and prospective resource, we have an NPV10 of US 1.4 billion at $8 gas, with many leads still to be converted into prospects. So the macro backdrop and onto Colombia. Colombia and its president Gustavo Petro have been leaders in for Latin America as it relates to energy transition. And our vision and business plan has always been natural gas as the transition fuel. And we're watching that play out before our eyes right now in Colombia. As natural gas is 50% or 50% cleaner than coal in terms of emissions, and 30% cleaner than oil. Coal and oil or oil products make up a large chunk of the energy demand in country, and Petro's agenda, despite the fact that in 2022 when he was first elected, was against all fossil fuels. He has now walked that back, given the energy security crisis that's ongoing in Colombia, as Colombia is in dire need for more natural gas. Also, 64% of the electricity demand in Colombia is hydro. But last year, with El Nino and more frequent and drier weather impacting the country, hydro has become less reliable. And in conjunction to that, with the phase out of coal, they're in a serious structural supply shortage of natural gas. So the structural supply deficit. Most of the major gas fields in Colombia came on production over 30 years ago, with Chichupa and Baena in the north coming on production in the mid 70s, and Cusiana and Cupiagua in the Llanos Basin coming on production in the early 90s. As a result, the majority of the gas production in the country is supported by mature fields with significantly declining not only production but also reserves, leaving NG Energy and particularly CNU9 as the only onshore gas discovery in the last 5 years. And if you look at this chart on the left, the gas reserves in the country, or the proved gas reserves in the country over the last decade, have declined 7% per year, and continue to. So what does this translate to? Earlier in 2024, the state-owned oil company Ecopetrol was calling for a structural deficit to begin in sometime 2025. However, over the last couple months, they've been quite vocal about that supply shortage is upon us, with declining production and declining reserves. There have been some offshore discoveries, particularly in October. Petrobras and Ecopetrol announced Sirius. However, those projects are at a minimum 4 to 5 years away from being tied in and coming on production. So all that being said, we find ourselves in our business in a historically low price volatility environment, but with high prices now at spot prices over $8 US and MMBTU, and the expectation that these high prices will be sustained or go higher for the foreseeable future. The last thing I should add is as opposed to North America, where you're signing or where you're subject to spot prices and hedging, we are signing 3 to 5 year firm offtake agreements at north of $8 US and MMBTU, which when you're in a high growth story like ours, and you can take price out of the equation and focus on high margin volume, it becomes much easier to deliver your business plan. So onto the assets. We have 3 blocks in the country, 2 blocks currently on production. The first one being Maria Conchita, up in the northeast, which is offsetting Chichupa and Baena. It has a maximum takeaway capacity of 20 million cubic feet a day, and it's tied into the TGI pipeline, the National Transmission Pipeline that goes down to the south and to the major cities in the country. The second block, which you can see on the left side of the map, is right next door to Canacol. This is our most prolific block, and it's tied into the Promigas pipeline, which is also part of the national transmission pipeline system that goes along the coast, the Caribbean coast, and up to the northeast of Colombia. When we think about 200 million cubic feet a day in our vision, CNU 9 will make up 75 to 80% of that vision. Lastly, in the northeast corner, onshore, we have Tiburon, which is offsetting a couple of the big offshore discoveries in Orca and Achuva. And to the east of that is Perla in Venezuela, which was initially discovered at 16 TCF and is over 7 TCF of gas. That's not in the near term for us, but very prospective in the future. CNU 9. We have a 72% operating working interest. We have 2 wells drilled to date, Brujo and Mexico. Brujo tested at 51 million cubic feet a day from multiple zones and is on production today. We are currently testing each zone individually and seeing the productivity of such and making sure that we optimize not only for production but for reservoir management given its early days at CNU. Mexico was drilled in 2022 and it tested at 15 million cubic feet a day. The pipeline is built, or the flow line, and it will be tied in right away. So we expect to be producing 30 million cubic feet a day or more from CNU 9 right away. There is a 30 million cubic feet a day processing facility there that could be expanded up to 50, and a 28.3 kilometer pipeline to Hobo or to Promigas, the national transmission pipeline. That's 5.5 inches and could go up to 38 million cubic feet a day. We will look to in the first half of first quarter next year go up to close to 40 as we drill our third well, Hechicero, which is between Mexico and Brujo. We're fully permitted for 11 pads, 2 wells per pad, so 22 locations. But what's critical to our business plan and our strategy, given the high price environment and the commercial market, is we don't take infrastructure risk, at least at this juncture of the business. So we have partners in InfraReyes and Serenergy and take-or-pay contracts with them. And they own and operate the facility and the pipeline. As we think about growth at CNU 9, the southeast corner is the gas window for us. We will look to grow the southeast portion of that with infrastructure expansion to 60 to 70 million cubic feet a day in 2025. And then CPF2 in the north with Hechizo up there with upwards of 70 to 80 million cubic feet a day on our path to 200 million cubic feet a day corporately. With that, you'll see not only next year cash flow growth, but given the fact that 3 out of 11 target zones in that gas window are only in the reserve report, you'll see big reserve growth next year as well. What gets us most excited about CNU 9 is the rock and the reservoir quality. The last well drilled at Brujo has one of the thickest gas volumes ever encountered at CNU or the lower Magdalena Basin with about 500 feet of net pay, porosity of up to 25%, and permeability of 500 millidarcies, which that's world-class rock. And so with that, that should translate into very strong well deliverability. The other important thing to note is, especially related to Canacol, is that the Cienega de Oro sandstone that we're targeting is much shallower than Canacol, so it's 3,000 to 6,000 feet. And thus, as we get moving through our growth plan and have scale, we should be able to reduce our well costs 40 to 50%. Our first block on production and what is looked at internally as a strong cash flowing foundation for the business is Maria Conchita in La Guajira. We have 2 wells drilled to date and tied in, currently producing around 15, 16 million cubic feet a day. And our last well drilled was RHR3, which tested at 65 million cubic feet a day. And is steady on and strong on production right now. We have firm 3 to 5 year offtake agreements with the 4 most highly credible gas distributors in the country in Vanti, Gases del Caribe, Gases del Occidente, and EPM for 14.8 million cubic feet a day, and it averages around US $8 MMBTU gas. We currently have 20 million cubic feet a day of processing, treatment, and transportation capacity. But as we drill our 3rd well on the block in the first quarter of 2025, we are in the process of expanding that to 25 to 30 million cubic feet a day. We look at this asset because of the geology being turbidites. We look at this asset as a maintain 25 to 30 million cubic feet a day, maybe a little bit more for a long time and hold it flat and a good cash flowing asset, whereas CNU 9 is big growth. The key points on the capital structure. So we're 32% of the shares are owned by management and insiders. 83% of the warrants outstanding are held by insiders, close associates, and Macquarie Group at an average strike price of around $1. And in a high growth business like ours, the I guess dilutive proceeds of 110.5 million Canadian is looked at as a potential funding source in the future. Lastly, given the contractual nature of our business on the commercial side, we look at the Macquarie debt as project finance, and we will, when we achieve our growth plans, maintain a low leverage profile. And however, we do have very strong support from Macquarie. They're very bullish on Colombia, and they're very supportive of our management team. So to conclude, if I can leave you with a few points, industry-leading growth relative to any of our peers in oil and gas, a very high margin, contracted, profitable business in a supportive jurisdiction that is facing serious energy security issues and a structural deficit for the next 5 years at least. A strong management team and board with 32% insider ownership. And lastly, over the next 12 months, we'll have several high-impact catalysts to come. Our ticker is GASX. We trade on the TSXV venture, our TSXV, the OTC, and Frankfurt. Thank you. So now to questions. When do you expect the first cash flow positive quarter? Well, we've already had cash flow from operations positive quarter, so we're already there. We are ramping up to 45 million cubic feet a day, and on an annualized basis, that's 45 to 50 million US of funds flow from operations. Can the company now finance itself, or is further debt capital required from the stock market? No, the company can finance itself at 45 to 50 million cubic feet a day. Like I said, on the cash flow basis, we will only look to drill 4, maybe 5 wells a year. We won't spend more than 40 million in a year. And as we achieve this growth plan, if, under circumstances where, we're already going fast, but if we wanted to go faster, maybe we would tap the debt markets, but not at this time. How did Colombia come to be in a gas deficit, and can you speak to the competitive environment to develop new sources of gas? Um, so as I spoke about earlier, Chuchupa and Baena and Cusiana are over 30 to 50 years in production. Reserves are in major decline, as is production. So those are some of the big Ecopetrol fields. And then Canacol next door to us at CNU 9 has been, struggling from a financial perspective or from a cap structure perspective. And so they've managed to maintain production at 160 million cubic feet a day. But we'll see uh, if they can still maintain that given their struggles. So with that, they're the only discoveries in the country. It's been very underinvested, especially because Ecopetrol and Hokal, uh, they're about 65% of the gas production today, but historically they've been 80. And because it's been so underinvested just by enterprises outside of the state-owned oil company, we sit in a place where there's been no onshore discoveries. There's big companies exploring offshore, but I think, as we all know, offshore, and especially from an infrastructure perspective, takes at least 5 years to develop. Lastly, there's a LNG regas facility in Cartagena that's already been expanded to 475 million cubic feet a day. And by 2028, they're looking to expand it to 553 million cubic feet a day. That's still not big growth. We're talking about a deficit of 300 to 400 million cubic feet a day between 2025 and 2030. So I guess the main points being mature fields and declining reserves and production, very underinvested. And so then you look to imports or offshore. And from an import perspective, it's just not going to fill the gap. And LNG prices right now in country are around $13 US and MMBTU. So we find ourselves in a very good position. What are drilling costs currently, and what do you expect wells to get to? So because we're moving one rig at a time, our Brujo costs over 11 to 12 million US a well, which is crazy. Canacol, this is at CNU 9. Canacol next door is drilling deeper wells, and these are conventional vertical wells or deviated wells at like 4 to 5 million US. So we're budgeting for 8 to 10 million US for the next couple of wells. So at Hechicero at CNU 9 and RHR 4 at Maria Conchita. However, those well costs could or should drop down to somewhere between 5 and 6.5 million as we do a drilling campaign. Especially because like 40% of the cost is in mobilization. What is the ramp up plan at CNU 9 through the end of the year? So we're currently producing 9 million cubic feet a day from one zone. If we open the choke and it can go to 14. We're just doing some tests, and we just did a PLT yesterday just to understand the reservoir. And this is at Brujo. We are going to open the middle zone today and test that out, and that's supposed to be more productive. At least our DSTs were 20 million cubic feet a day. And then there's one more zone, the upper zone, which tested at 21 million cubic feet a day. So we're very much in this production optimization phase, and we look to bring on Mexico in the next, call it 10 days. And in conjunction with Brujo, we should be able to achieve 30 million cubic feet a day with 3 compressors working and 1 backup at our CPF. From there, we're working on either looping the pipeline to Hobo or a twin pipeline and growing and just adding compression, because the dehy plant can do up to 63 million cubic feet a day at high pressure, but I would say somewhere between 50 and 60. So anyhow, through year end, we have a line of sight to 30 million cubic feet a day from 2 wells, and we'll try to go higher. What are your milestones for 2025? 25 million to 30 million cubic feet a day at Maria Conchita, and I'll say 70 to 80 million cubic feet a day at CNU 9. The milestones being drill 4 to 5 wells at CNU 9, 1 well at Maria Conchita, and really advance and grow our production and strike the iron while it's hot, because we're in this high price gas environment. Is the gas from CNU 9 currently getting sold, or it's still in testing phase? No, we've been selling gas at CNU 9 since the start of November. And we'll look to ramp that up, as I just discussed. And 25 million cubic feet a day are under offtake agreements through year end. But no, we're selling gas at CNU 9. Will NG Energy a dividend payment company in the future? Greetings from Austria. Well done. Greetings. Then thank you for signing in at such a late hour for you. Yes, we will. I mean, right now, we want to grow this business to 200 million cubic feet a day. But as we grow, we will be looking at the best return for shareholders. We don't plan on using a lot of leverage in that growth, so we want to be mindful of that. But given we don't see ourselves spending more than 40 to 50 million US a year on this growth trajectory, and given the contractual nature of our offtake agreements or less, and inherently cash flow, we will look to pay a dividend in due course. Is there a difference in pricing between Maria Conchita and CNU 9? Yes, there is, because Maria Conchita is tied into TGI, which goes into goes down the center of Colombia and to the major cities in the country. That ends up being 65% of the demand, and they are in a serious shortage in the center of the country. Most of the thermal plants, however, are along the coast, which is, and Promigas is the pipeline on the coast for CNU 9. And so that would be the main, I guess, pricing environment there. Promigas and TGI are connected up northeast of Maria Conchita. And so technically our gas can be sold into the center of the country in a major shortage situation. However, for the end buyer, the transportation costs would be quite high. That being said, it is happening today, and that the gas price along the coast is around $8 right now as well. How are we doing for time? I think, have we already started phase 2 at CNU 9? If not, what still needs to be done, and by when will this be completed? We're still in negotiations on definitives and some of the planning aspects. We will look to announce that in the coming months, and be in a position for the back half of the year to really show our growth plan and be able to exit 2025 at more than double the production that we're exiting at this year. Well, thank you, everyone. And we're in NG Energy. Our ticker's GASX. We're on the TSXV, the